Hi, everyone. Jay here. Lecture 4, we're going to talk about COVID 19 and the economics behind what's happening this past year, 2020. And we will also introduce some new tools, benefit cost analysis. We'll think about how to think at the margin, marginal benefits, marginal costs, another useful tool for us to understand how things work. And so we'll break this up into parts like we have before. And let's get started with part 1. So when we think about COVID-19, right, this is a pandemic like many pandemics in the past and pandemics will have in the future. This is what we would consider to be a market failure, in the sense that private exchange, private trade, travel, tourism, just basic daily life of things we used to take for granted, going to a concert, going to a bar, going to a restaurant, going out, having friends over, etc. All these things increase the risk to others of spreading this virus. And so the marketplace itself does not account for the chance that we're going to spread the virus. There's no price on this virus. If you have it and you cough on me, you don't pay me money. I don't pay you money not to cough on me. It's what we would consider a market failure. Typical economics can't solve this. This is where government intervention comes into play. And the word that we use to describe this particular market failure is an externality, which we'll define later. And then we'll also look at some benefit costs and thinking at the margin. So when we think about pandemics, there's a long history of pandemics affecting the world and the global economy. It's not the COVID-19 is not the first. It's not going to be the last. The chart there on the left, you can see that the Black Death way back in the 1300s killed 200 million people, and smallpox killed 56 million people, and Spanish flu 100 years ago killed between 40 and 50 million people. So you can see the different impacts. HIV killed 25, HIV/AIDS killed 25 to 35 million people. So in that context, COVID-19 has definitely not been the worst. It's definitely not been just the flu. It's been much worse than Ebola. It's been worse than SARS and some of the more recent ones. But you can see that these viruses have been around a long time. And by some estimates, they will continue, especially these animal-borne viruses like COVID-19, well into the future. There's some estimates that there's another 8 to 10,000 of these viruses that have yet to emerge, but have the potential to emerge based on human and mammal interaction. And the marketplace does not account for this, and this is the problem. So if we just take a quick look here at the cumulative cases over time, we can see where the big impacts have been. The US, Russia, Brazil, India, where are the dark red. You can go to this link here on the far right at Johns Hopkins, and you can get this animated world map. You can click on it and you can see the progress, or essentially the regress over time. If we look at Wyoming, again, you can look at Johns Hopkins University for state timeline data. You can see Wyoming has not had all that many relative to California and New York and Texas and Florida. But then again, we have not that many people and we have a lot of open spaces. And our governor has been fairly aggressive in terms of restrictions and closing and keeping things centralized from Cheyenne, so that everybody's operating on the same page. Now, of course, at the university, here we are online. because of COVID-19. And here we are paused for UW because of COVID-19. And so it's still real and it's still an issue. And for people like me above 60, right? 60 and above, that is the most at-risk group. So even though students, between 18 and 28 have probably are in better shape and have less of an impact, this spreads just like they talk about in terms of spreading from one person to 5 and from 5 to 25, that spreads exponentially. Now, what's the impact on the economy? Well, you can see by this graph over here, you look at the very top one, which is real GDP, and you can see that drop in the second quarter of 2020. So that would be April, May, June, and it's nearly a 9.5% drop. It is the steepest drop in economic output on record in the United States. So what we're going through is bigger than the Great Depression, bigger than the Great Recession in terms of a contraction of the economy. So when we talk about economic growth, well, this is the opposite. This is economic contraction or a recession. You can see, if we just quickly glance at these charts, you can look at them. Consumer spending, which drives the U.S. economy, has gone way down. National debt, it's gone up because we've been trying to essentially print money to send it out to folks all around the United States so that they can spend it to try to keep businesses rolling, right? So the U.S. money supply is going up. Consumer confidence or sentiment here has fallen significantly. U.S. dollar, the power of the dollar has fallen. Fiscal expenditures, how much money we're spending at the central level, has gone up quite a bit. Loans to the private sector, people again taking a loan to try to survive this impact. All of these changes are like things we've never seen before. I mean, this is the national debt going up. This is like World War II. Right? I mean, this is a huge impact on the economy. Interestingly enough, the Dow Jones or the stock market continues to rise, continues to go up, because the stock market, you have to think of like Las Vegas. It's a betting tool. People are betting that the economy is going to get better once we either A, come up with a virus, B, we social distance enough so that people can have a semi-normal routine. They're never going to be normal again for a while, but a semi-normal return. The unemployment rate, I mean, this drop here from nearly 81% of people between 25 and 54 working. You can see that drop right about 2008. That was the Great Recession, when the housing bubble burst right around there. And you can see then with Obama and with Trump, the steady increase in employment up until 2020, where we had one of the biggest significant drop in employment that we've seen. Now we see it crawling back up again, but we're nowhere where we were. We're back to the levels of the Great Recession back in 2008. So we're still quite a ways in the hole in terms of employment, and which also implies more expenditures by the federal government because there's more people filing for unemployment insurance. All right, so if you want some great data, I would go to these two sources. They're scientific, they're neutral. Johns Hopkins is just recording all the information they can. University of Minnesota, their Center for Infectious Disease Research and Policy. Again, it's a great source to get more information on just the facts. Skipping the presidential election and the politics, Democrats, Republicans. Go to the scientists. Try to figure out what they know and what we know. You can put whatever spin you want on it after that. But let's just try to get a hold of what do we know about the impact of COVID-19. These are two great sources for you to go look at. All right, so when we say a market failure, what I mean by that is something very specific. The market fails to create value by trade when some of the benefits and costs are ignored by the traders. So in this case, going to a bar has a cost that we ignore, which is spreading the virus, right? So the price of drinks or the price of food or the entrance fee, none of that is accounting for someone spreading the virus, right? We're not paying extra to give everyone a mask, and we are now perhaps, but back then, back in the early part of 2020, there's no way the market could account for this because, my breathing out, I didn't think would be affecting everyone, and so how would I set a price for that? Other examples include pollution. Health costs are ignored by firms if they're just dumping toxins in the river like they used to do 100 years ago. Superfund sites are the remnants of big firms. We have a Superfund site in Laramie based on where they used to make old railroad ties and all the dioxin that leached into the Laramie River back then. Climate change, again, another big market failure. Biodiversity loss. We're ignoring the public benefits of keeping the web of life intact. Pandemics. So what we have is a social cost that is not the same as a private cost. There's a wedge between what's costly for you as a person and what's costly to others because of what you're doing. All right. Or there's a private and a social benefit that what's good for you is also good for others in society, but they're not paying you to provide it all. So you're going to underprovide what we would consider a social benefit, and we're going to overprovide what we would consider a social cost. This is a market failure. All the stuff we talked about before, creating value, now we're destroying value because we're ignoring these costs and benefits that are real, but not accounted for in the market price. All right, so there are types of market failures. An externality, which we'll define in more detail in a second. Common property, public goods, asymmetric information, monopoly. Those other four we'll talk about in later lectures, but today we're going to focus in on the externality. All right, so COVID-19 is an example of an externality. An externality exists when a person or a firm doesn't bear all the costs or receive all the benefits of their actions. Again, if you plant flowers in your yard and I walk by and I enjoy the flowers, I don't pay you because you planted flowers. Or if you put up some obnoxious, inflammatory sign and I walk by and it really makes me angry or it really upsets me, you don't pay me because all of a sudden I'm upset or I'm angered, right? The marketplace doesn't exist for this. And so when the social costs and social benefits are ignored by the market, we would consider that to be a market failure, right? So an externality is an unpriced bad or an unpriced good. So you can have positive or negative externalities depending on whether it's harming people or whether it's making people feel better. But again, the key point is that there's a wedge between what's good for you and what's good for society. And the question is, how do we understand that wedge and how do we close it? Okay, so one way to understand these externalities and how big they are and how important they are is to use what's called benefit cost analysis. And so we're weighing the pros and cons of some policy to try to close that wedge between private and social benefits or private and social costs, right? And so the policy for COVID-19 is social distancing. Everyone's staying home, staying 6 feet apart, wearing a mask. I mean, you can call it physical distancing because I can still yell at you from 6 feet away and we can still have a conversation. But the question then is, if there's this wedge between what you want to do privately and what, say Sturgis with 500,000 bikers up in South Dakota who the vast majority weren't wearing masks, right? The opposite of social distancing. The question is the policy of social distancing worth it, right? Where the benefits are saved lives and the costs are shutting down a lot of economic activity. Here in Wyoming, we ran the first benefit cost study of COVID-19 last March when this was taking off. There was a team of 5 of us, and I'm going to stop here for part 1, and we'll talk about that study in the next lecture, part 2.